This interview is brought to you in association with Rabobank.
Hi, thanks for joining us on Rural Delivery Online, where we hear from people who are leading lights across our primary sector. One of these is Hayley Moynihan, Director of Dairy Research for New Zealand and Asia for Rabobank International. Hi Hayley, good to talk to you.
You too, Roger.
Now Hayley, it's been a while. I think it was late March we last spoke. And then, if my memory serves me well, we were in an environment where prices had maybe just started to come off internationally, but China was still buying strongly, and there was a big question mark about what prices would do as the European peak season came along. So if you could just talk us through perhaps that environment and what's happened since.
Sure, happy to, Roger. And it did indeed play out broadly as we'd expected, that surge of milk that came onto the market did soften prices. What happened was the wave was actually even greater than anticipated from Europe in particular, where European production's actually been lifting close to 6% year on year through the first part of 2014. And that has meant that there has been a lot more product available. And at the same time, Chinese purchasing retreated quite considerably. As it turned out, their vigorous buying in the last 8 months turned out to be a little more than they needed, and that meant prices actually fell more dramatically, but generally in the same direction as anticipated.
So Hayley, did we all, including the Chinese, simply overestimate the average Chinese demand for this product?
Certainly it appears the ability of Chinese consumers to pay these very high prices for dairy products may have been slightly overestimated. Retail prices in China increased considerably through 2013, so that year-on-year impact is really coming through. At the same time as supermarket prices are rising, there's also been a change domestically in China where the giving of gifts that are typically dairy products by both state and private corporations has also eased. So there's been a change in the way that some of these gift packs and higher-end dairy products are sold in China.
With a rise in retail pricing in China, is that simply the retailers themselves trying to make bigger margins, or was it a response to a broader increase in their cost base or other costs within the supply chain?
It's been pressure right along the supply chain in China, particularly for high-quality milk. High-quality milk is expensive to produce in China, and that's increasingly what the market is demanding. It comes at a high cost because of the feed costs and the cost of construction of large-scale dairy farms, and that really then manifests itself along the supply chain. A high-cost raw material lowers margins for both processors and ultimately raises prices for end consumers.
So as prices have started to come off, what's happened? Have other buyers come into the market? I believe you were speculating a few months ago that it would probably reignite demand in the Middle East. Did you see that happen?
Yes, they have taken that opportunity because particularly through the second quarter of 2014, this is the first time since late 2012 that other purchasers have had a chance to buy increased volumes of product that hasn't been sucked up by China. So we have seen particularly increased buying from countries such as those in the Middle East, Algeria, Saudi Arabia, the United Arab Emirates, as well as some in Southeast Asia as well. So those buyers are coming back in, but at a lower price level than what China had previously been purchasing at.
Does the ability of the Chinese market to make the global play here concern you? There's the relatively small changes we've seen happening in China, and yet the ramifications are so huge. We know that's probably the world we now have to live in. How resilient do you see the system being if we were to get a bigger shock?
Yes, it is a thin market. We talk about dairy trade being thin in terms of a relatively few numbers of both buyers and sellers, if you think about it from an export point of view. So that reliance is mutual to a degree. China has a huge influence on the buying side, and you could argue that New Zealand and Europe have a huge influence on the selling side. So in terms of vulnerability, that does even itself out. You know, a drought in New Zealand, for example, or disruption to production and exports in Europe could have an equally large effect as the small changes in China do.
If we look at this growth that we've seen in Europe, New Zealand had a particularly strong end to the season, more or less vis-a-vis last year, drought affected. What's happened in Europe? What have they done to build that supply?
It's been a combination of high milk prices in Europe and much better weather than they enjoyed through the first half of 2013. So those two things have effectively brought forward a lot of the production increase from the relatively lower cost production regions in Europe that we were expecting to see last year when milk production quotas, when milk production quotas are removed in Europe. So that's been a surge in production, and it has meant that we're looking at increases of around 6%, which on a large production base in Europe is now starting to spill out onto the world market, with exports up around 20% for the first 4 months of the year.
Wow. Do you think that this year-on-year growth can be sustained in Europe?
No, we are expecting it to ease through the second half of 2014 because milk prices have eased in Europe. Therefore, the incentives to produce that extra milk are starting to lower. And also, European milk producers are currently paying super levies, which is the penalty for exceeding quota. And as milk prices move lower, they'll be less keen to pay those penalties.
Yeah. When those levies come off, which isn't very far away now, do you think we might see some disruption there as the market tries to steady what is a reasonable amount of supply?
Yeah, we actually think the market will accommodate it reasonably well because some of that production pickup has actually happened this year rather than next because of those high prices. And therefore the ability to push too far above what has been really a phenomenal surge in production occurring in the last few months will be challenging to repeat. And therefore we do expect a response, but not one that will overwhelm global markets or cause a major disruption into 2015.
If we could move across to the US, Hayley, what's happening there? They were a bit slower to respond to this whole price surge, weren't they?
They have been, and really have continued to be as well, despite the fact that the relative prices between milk prices and feed prices are very attractive for US farmers at the moment. But they've had a relatively cold start to their season, and that has meant that particularly in places like the Midwest, that surge in production hasn't occurred. They've also used the high returns or high marginal returns to pay down debt, buy additional land to secure feed supplies rather than necessarily milk more cows.
All quite sensible stuff, really.
It is extremely sensible in reaction to what has been a tough couple of years for a US milk producer. We do think that'll start to turn around in the second half of this year, though, because margins are expected to remain still very positive for US producers. And now that they've tidied up those aspects of their businesses, if you like, we think we'll start to see that come through in higher milk production.
Okay. And across South America, any particular trends you're seeing there?
Yeah, some interesting ones in both Brazil and Argentina, with Brazilian production improving to the point that they've had a small net surplus in their dairy trade balance in recent months, which means they'll actually be relying less on importing product as we look through the rest of 2014. So for those sellers that were selling product into Brazil's not likely to be buying too much in the coming few months. By contrast, in Argentina, it's been tougher climatically, and we do think that export volumes will be lower over the remainder of 2014.
And we shouldn't forget the Aussies.
No, Australia's seen a modest improvement as well. So improved weather and some improved milk flows over the later part of the season is actually improving their export prospects, and that's expected to continue into the new season as well.
Okay, so looking ahead, what's the broad trend then, price-wise?
Yeah, we're expecting this current trough in prices to persist through the rest of 2014. So that's prices staying below $4,000 per tonne for whole milk powder, probably around the $3,700 per tonne mark, until we get into 2015. It's going to take markets a little while to absorb that flow of milk that's out there, whether that's currently being held in inventories in places like China or whether it's still yet to be shipped in places like Europe and New Zealand. So it does mean we're looking at this trough lasting for the remainder of the year, and those prices starting to improve into the first quarter of 2015.
And across the other products, butter, SMP, cheese?
Yeah, broadly following a similar trend. And we tend to see prices align over time because manufacturers will move that milk into the more favourable product streams if a premium does exist at a given time. So it will mean that prices for things like cheese have generally not lifted as much as powder anyway, so staying more stable before starting to increase into mid-2015.
And what sort of behaviours do you think this sort of market will drive in New Zealand amongst our dairy farmers?
price expectations to stay at a lower level through the early part of our season is really what happens with exchange rates. The high New Zealand dollar relative to the US dollar will be putting pressure on farmgate milk prices as prices for commodities stay at a relatively low level. So I think that will be a challenge, and as always, we'd encourage milk producers to sensitise their budgets around milk price reasonably carefully.
Yeah, all right. Look, Hayley, it's going to be a very interesting quarter, particularly as we come through to whether we get more interest price rises. I'm sure will have an effect on that dollar. In terms of the domestic environment, how are you feeling how resilient, I guess, New Zealand dairy farms would be if we stay in a trough for a while?
Yeah, New Zealand farmers have proven to be very resilient, and I think have come to accept over a long period of time that volatility is normal. And so from that point of view, what we're still talking about here is commodity prices that, relative to a few years ago, still look quite favourable. But it is lower than has been enjoyed in the last 18 months. So it's a matter of that adjustment and some slight belt tightening. But these are factors that I think New Zealand farmers in particular are well accustomed to.
Good to hear. Hayley, thank you very much for joining us. Appreciate your time.
My pleasure. Thanks, Roger.
Okay, talk again soon. Thank you. Bye-bye.
This interview was brought to you in association with Rabobank.